Hi traders, this is TradeAlerter from ForexSignals.com, coming to you on Tuesday the 9th of September. Now, listen, unfortunately we were going to do the Carney speech live, but I had some technical difficulties here. Now, we are here, and it just came out 10 minutes ago, and we're just reading through. He was basically talking about when they're going to raise rates, and that raising of rates is coming. Market immediately shot up, hit some resistance. If you read the daily report I wrote about an hour ago, we're talking about selling at 161.50. Now this level was just hit, but I didn't sell. Now you might ask why. Look, I found it very interesting that he would be ignoring so much the Scottish vote. And the fact that he did talk about this. Now, it's almost like he's speaking about a subject which usually would allow a market to rally strongly to when the market's under pressure, so as to sort of get expectations out there without a rally in the pound, which is a good timing on his part. Now, but this does add to the upside pressure if there is a no vote in Scotland, and how this is going to play out going forward is that you've got to keep that in the back of your mind about what he's speaking about here. Right, so he's talking about, he literally says you can expect interest rates to begin to rise in spring of 2015, and that the inflation mandate will be still maintained. All right, but he said the key to this, and he's speaking to a trade union, and they're the people who actually lobby to get increases in wages. Key to this will be the earnings growth and unit labour costs. Right, so going forward, obviously they're going to be very important. If you see any sort of rise in the wage inflation, you're probably going to expect the pound to rally strongly as expectations of hiking rates will be brought forward. But at the moment, yeah, they've got some very weak wage growth over there. All right, but how do you play it? This is important. Now, so 161.50 was hit, missed the entry, shocked by the subject matter, the explicitness of it. Now, market's gone back down to the previous resistance, which was 161.20, and it's finding a little bit of support there. Now, how I would actually play this is that given the market's a little bit oversold, you may see an opportunity here for short cover and rally. It's not something I would chase. So if I wasn't, if I'm in the market already, then I might just let it run here, but I'm not going to chase, I'm going to buy here. I'm definitely not going to sell here. Where I'm going to be looking to sell is looking at where the market is compared to where we've been. I'm looking at at the moment I've got a limit order to sell around 162.40. You may say that's significantly higher. Yeah, I don't really want to sell so low. I want to be selling into the next poll, which is coming out on Thursday, as high as possible. Yeah, and the market may use this as an excuse to short cover, especially if there is another piece of news they can clamor onto saying, the unionists might, be swayed by some of the bribes that are coming out of England to try and keep the union together. So this is the Scottish no voters. All right, so let's just keep a close eye on this. This is something which is going to play out for the next 24 hours. I'm looking at, above 161.80. If we can get above 161.80. So where are we looking at here? Yesterday's high. Above that, little pop. Maybe even sell again at 95, say. Not too bad. And then sell again here. But you can expect a 50 to 100 pip move on the next poll. And think about it more as in the line of if it goes back to the no vote being in control, then you're probably seeing 163. On that news alone. Now, and maybe a 160 test if it shows that the yes vote is still winning. All right, so that's coming out in 2 days. That's what we're watching next. Look, I want to apologise for not being able to live trade that. I would have been talking about that price action, and I would have been suggesting not to sell, even though we did suggest that level is good. Level is good, and the price action so far, you would have made 20 pips, but definitely could have broken higher given the subject matter. And you've seen the markets actually already rallied 30, we're at 70 pips already today. And so it was already on a relatively strong footing. There's actually some people now who are caught short. They're the ones who are going to have to be a little bit careful here that the market doesn't want to push higher, because what would force the market higher here would be the trailing stops from some of the big positions, say from 166 to 170, that have been selling, and they're looking for an excuse to get out, square up ahead of the announcement as well. They know that no vote's likely to win, or has a good chance as well. They don't want to be short going into the announcement, yeah, but they're waiting, they're being patient, they're waiting for as low as possible, and they're expecting, 160 test, which is possible, but, there's going to be a lot of profit taking before the announcement, for sure. Yeah, it's just too big a risk to be short into, and the market's now, short money is now heavily short. Yeah, and the only people who are long are the ones stuck, and the bargain hunters, and they're not the one. They're the ones who are going to be taking profit pretty quickly themselves as well. All right, so the netting out here is that there should be a rally going into next week's announcement at some point. It's just, where is the base? Is it going to be a 160 test? And that's going to be from the polls that are coming out in 2 days, and also a day before the announcement next Wednesday. All right, so good luck, traders. Come to the trading room if you want to talk about some of the price action. Like I said, today we're looking at another 100 pip rally or so in the pound. We're not going to buy it. We're just looking to sell up there as good risk reward. Cheers.